It's a huge deal when you're seeing $8 billion worth of gold delivered, and in the March contract there was north of 4 billion delivered, and every single month we're seeing massive amounts delivered. This is an anomaly to the nth degree. So something big is happening with gold here in the United States, and with silver, as May was the largest delivery of silver ever. It was also the second or third largest delivery of silver from a bank to a non-bank participants, from banks to non-bank participants, hedge funds, family offices, etc. There's big money, and it's not just the bullion banks this time. Who these participants are, I'm not quite sure, but something big is happening with gold and silver on the COMEX.
Andy Schectman, CEO of Miles Franklin, is issuing a strong warning about a critical shift in the precious metals market that could have far-reaching consequences. He points to a substantial increase in physical gold and silver deliveries on the COMEX exchange, with May seeing over 2,500 gold contracts, valued close to $8.3 billion, delivered during a period that is typically slow. Silver deliveries have also reached record highs, underscoring a growing preference among investors for actual metal rather than paper contracts. Schectman emphasizes that this trend extends beyond institutional bullion banks, indicating widespread investor demand for tangible assets. With over 3 decades of experience, he regards these developments as among the most significant he has observed, highlighting a growing distrust in the paper gold market's ability to meet physical delivery requirements. This growing demand for physical metal is reflected in the evolving makeup of COMEX's inventory, where eligible physical gold now accounts for roughly 90% of open interest, a sharp rise from the historical average of under 20%. This dramatic change signals a rush by market participants to secure physical metal ahead of regulatory compliance deadlines, revealing weakening confidence in the system that relies heavily on paper contracts. Market analysts suggest this points to a stressed paper gold market, where many short sellers may lack the actual metal necessary to fulfill their obligations. The widening gap between physical demand and paper supply creates significant strain on the system, highlighting fundamental vulnerabilities in the way precious metals markets currently operate. If these trends persist, the structure of the gold and silver markets may face profound changes. Exchanges like COMEX could be compelled to modify their settlement and operational procedures to align more closely with the realities of physical metal demand, potentially diminishing the role of synthetic paper instruments that have dominated the market for decades. Such a shift would reinforce the importance of physical precious metals as true stores of value, challenging existing market norms. Although this unfolding situation has not gained significant attention in mainstream financial reporting, its potential to reshape the precious metals landscape and, by extension, broader financial markets, should not be underestimated. Now, we present the clips from Andy's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
We continue to see this month over month over month. The amount of gold coming into the country is off the chain. It really is. And this was the largest delivery in a non-active delivery month ever in the history of the COMEX market. And we saw also, the same thing happen with silver, which is an active month. It was the largest silver delivery. But for gold, it was 25,401 contracts delivered so far. So if we take 25,401 times 100, that's times 3,250 bucks. All right, so that's 3. So that's 8,255,325,000. So almost $8.3 billion worth of gold was delivered. And one of the things that I read that was very interesting today was that there's 1 day left which is for the last notice of the May contract, and there's 526 contracts that are still open. What the author was basically saying, and let me give him credit too, just a second. Let me just look at my email. I want to give him proper credit. I read it in just this afternoon. I like to give credit where credit is due. I don't see it. Oh, Michael Lynch. Michael Lynch is very good, and he said that there's 526 contracts that are undelivered. It's one of the highest ever with the last day notice. Normally, there's just a handful, if that, of contracts that have not settled. What he is saying is that this is an indication that a short does not have metal to deliver, as usually there's only a few contracts remaining at this point. I'm not predicting a default, as the short will almost certainly come up with some metal. However, this is an indication of short selling metal that they do not have. So, yeah, it's a huge deal when you're seeing $8 billion worth of gold delivered. And in the March contract, there was north of 4 billion delivered. And every single month, we're seeing massive amounts delivered. This is an anomaly to the nth degree. So something big is happening with gold here in the United States and with silver, as May was the largest delivery of silver ever. It was also the second or third largest delivery of silver from a bank to a non-bank participants, from banks to non-bank participants, hedge funds, family offices, etc. There's big money, and it's not just the bullion banks this time. Who these participants are, I'm not quite sure, but something big is happening with gold and silver on the COMEX. It's easy for me to say that, right? The public should see this. Well, why should they see it? Well, the biggest deliveries in the history of the COMEX market are happening month over month over month over month over month. We started in November, and here we are, and it hasn't stopped. And it's one thing to see this metal come into the COMEX. It's another thing to see it delivered. And whether or not it leaves the COMEX or just moves to eligible, not registered, it's massive. The biggest money in the world is telling you that something's afoot with gold and silver, and so the public should be aware of it. But as Robert Kiyosaki always says to me, Andy, people can't get out of the way of what they don't see coming. And you got 120,000 people follow you, and but that's nothing compared to the people that are watching Fox News or CNN or CNBC or whatever these channels are that don't talk about these hugely pivotal things. They're missing out, and that's, God bless someone like yourself who's been doing this for a long time, and sticking your family name and your neck out there and talking about this stuff. This is huge. It's one of the biggest developments of my 35-year career. 100%. It legitimizes everything that we've ever talked about on a scale that I didn't think we'd see. So it's amazing, and I just want to thank Daniel and Rob and all the people in this effort to bring this to a head where it's now actually real.
With gold and silver maintaining their reputation as reliable stores of value, their significance in the evolving financial ecosystem is gaining renewed attention. These metals have stood the test of time, preserving wealth through periods of inflation, currency devaluation, and economic crises. Their intrinsic scarcity and physical presence give them an edge over purely digital or fiat assets, grounding them as a tangible safeguard against the eroding effects of monetary inflation. As digital currencies and crypto solutions gain traction, it appears increasingly likely that the future monetary system will integrate both traditional precious metals and innovative digital assets, rather than relying exclusively on one or the other. Gold and silver, with their long history of retaining value across diverse market conditions, offer a stable anchor in an environment where many fiat currencies are losing purchasing power. This dual approach leverages the strengths of both worlds. Digital assets bring speed and convenience, while physical metals provide security and trust rooted in centuries of acceptance. Despite their enduring value, precious metals face hurdles when used as everyday transactional mediums, primarily due to the complexities of taxation. Capital gains taxes on the sale or exchange of gold and silver can reduce their appeal as liquid, practical alternatives to money. Although some forms of legal tender coins are exempt from specific taxes, these advantages are inconsistent and limited in scope. Advocates argue for reforms that would eliminate capital gains taxes on precious metals, making them more accessible for use in daily transactions and encouraging wider adoption. Such changes could reinforce the role of gold and silver not just as passive investments, but as active functioning currencies. This shift would be particularly impactful amid growing concerns over the depreciation of paper money and the erosion of trust in centralized financial systems.
When you listen to DeSantis talk about the bill, he said, gold and silver continue to move higher. So, when you add that in, like, for example, on the Glint app, at the end of the year, you get a statement from one of the big accounting companies that details what was a taxable gain and what wasn't, or a loss rather. But that's one of the issues with all of this gold and silver that is transactional, whether it be digital or not. You have federal capital gains taxes. So certainly it would be nice to, if he's right and President Trump does remove that, it's a huge boon for physical metals and physical metal holders. And we shouldn't be taxed. I mean, if I can go from Canada to the United States with 240 gold maple leafs on me and get through customs without reporting because that $12,000 face value at the time was valued at $9,700 because of exchange rates, they'd let me come into the country with 240 gold maple leafs, which are $50 face value, with no reporting. So the legal tender aspect is real. We shouldn't be taxed on it any more than if you had junk silver, dimes, and quarters and went and spent them at the Publix grocery store here in Florida, and would be responsible for paying capital gains taxes. Although it would be difficult to track that one. The point of it is it just shouldn't be the case with legal tender. So I think that's certainly a worthy cause to get behind, and I'm thank you for having him on tonight with us.
The rising demand for physical metals over paper contracts is poised to fundamentally reshape the precious metals market, potentially forcing exchanges to reform settlement processes to prioritize actual metal delivery and greater inventory transparency. This shift could reduce reliance on synthetic trading positions, increasing market stability, but also disrupting traditional financial practices. As investors seek reliable stores of value amid currency volatility and economic uncertainty, physical metals may gain prominence, driving up demand and prices. Consequently, regulatory and tax frameworks might need to evolve to support this growing trend, with significant implications for broader financial markets as confidence in paper-based instruments diminishes, potentially triggering widespread market adjustments. That's it for today. Share your thoughts on Andy's in the comment section below. If you find this video informative, don't forget to support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.